Well, I hate to say it, but I told you so. Mortgage rates jumped up mainly because the jobs market was that much better and wage growth. This is the area where it really killed it, was wage growth. Okay, more and people are getting more in wages, and that's freaking out the Federal Reserve. So let's get over to the headline news that we have right now. And I'm going to go to Yahoo Finance. Let me get my head out of the way so you guys see this whole caption. But right now, the jobs surge to reignite the Fed's debate on what they're going to do over interest rates. Then they say this week in Bidenomics, please stop hiring. But I'm not for that. I still want everybody working and the economy okay. It'll gradually begin to come down. I know I'll get grief down below. And then the U.S. economy booming with 272 jobs added in May. And then you start going over here, U.S. consumer borrowing restrained by drop in revolving credit. So the consumer's starting to finally drop some of their spending habits. Treasury markets or interest rates surge on the data that we have today. And then that's basically the rest of it. But here's a caption right here. I think it's going to slip by everybody right through here. U.S. seeks 6 million barrels of oil to replace in the strategic petroleum reserve. So we have a reserve as a country. Basically, if oil prices just go skyrocketing, we can tap into these reserves to help, or in case of wartime. Okay, so those are usually the times that you look to do this. So what are they trying to do? Well, the U.S. is speeding this up to try to recover and put as much oil in the reserves as we can, because we're starting to tick off China and Russia, North Korea, and everybody else a little bit more. So I think we're going to need it. So let's look into this just briefly. Where's oil prices right now? So you can see this. This is the chart. Remember back in 2022, right through here. It was the summer of 22. I remember when gas prices were like $6 a barrel. Okay, so that makes it. But now if you come down and you're saying, okay, now the prices are about $75 a barrel, shouldn't our gas prices be much less than they are today? Well, that's an area where, I'm contentious about that. But here's the, I won't say it's funny. Here's the basis behind this. This tells you how disconnected the government is with kind of just the economics. Biden releases 1 million barrels of gasoline for the Northeast reserves in bid to lower prices at the pump. Okay, well, when did he do this? Back in June of 2022? No, he just did it. He just did it. May 22nd of 2024. So let's go back to this just to make it make sense. May 22nd or May 20th, right through here. Oil prices were $77 a barrel, but we're paying what, $5 at the pump? We were paying $5 at the pump back over here. So should we tap into our oil reserves, or should we just start opening up maybe more energy sources, things like that, and stop? Like Joe Manchin, he's from West Virginia. I'm from West Virginia. If you've never seen this guy, he's I think the congressman or senator from West Virginia. Check him out. I mean, he's on the Biden, he's in the Biden administration, but he's completely against all this is what's going on. So I thought I'd just give you a little bit of that tidbit before the weekend ends. So let's get over to the bond market to see where MBS is closing for the day, and it's dismal. You go down through here, and this is where we basically went. The opening bell came in, and then the report came in, and MBS has just plummeted. Now, what does this mean to you? Well, how you focus in on how you figure out what's going on with mortgage rates, right over there. That's a mortgage bond that trades on Wall Street. Now, all you need to do to understand this is this. If that number is going down, rates are going up. There's an inverse relationship. 43 is pretty big. Okay, so we're probably going to see more deterioration in this. I wouldn't be surprised if we hit 7.2 by the end of the day, but there won't be any reposts today. So on Monday, I'll come back and let's see where we start the week next week, 7.15 or 7.2. But next week, hopefully we have a little bit more better news out. And if you guys don't remember, we have the Federal Reserve meeting. So it's going to be a action-packed week full of economic data next week. And then on Wednesday, we'll find out what the Federal Reserve has decided to do on this cycle. There's no expectations of them increasing rates at all. They're actually probably not going to do anything. So that's my report for today. My name is Dan Frio. I'm hopefully your mortgage loan officer for life. If you'd like to find out more about me or learn or reach out to me, just go to therateupdate.com, and that's my website. So thanks so much for watching, guys. If you haven't yet subscribed, please, if you would, please do that right down below. It's really simple. Just click the button and you're good to go. Have a great weekend. Be safe out there. God bless, and I'll see you on Monday. Bye-bye.